Joe Biden, Vladimir Putin, Angela Merkel, Xi Jinping, and other world leaders. Imagine all of them standing in a pool of gasoline. Now, let's say Joe Biden has 10 matches, Putin has 5 matches, and so on. It really doesn't matter how many matches they have or who lights the first one. The simple fact of it is they're all going to burn together. This concept is called mutually assured destruction, or MAD, as the acronym. It's a doctrine of military strategy that shows the potential outcome of nuclear warfare. An attack and retaliations can devastate all sides. These analogies lend a hand when trying to explain the global monetary system. Countries have had to leverage up in tandem to stay competitive. They have to, or they fall behind. And modern monetary theory, MMT, has added fuel to the dangerous situation. Just a quick aside, I've packed this video with unique research. You're about to get a clear picture of how bad the US debt situation has become. And if you find this useful or thought-provoking, I'd really appreciate it if you just tap on that like button down below. Also, please consider subscribing for even more research. In short, MMT, modern monetary theory, says countries with their own fiat currency, like the US, are not constrained by their tax income and other revenues. Unlike us citizens, the Fed can spend without limits. The money taps are open and debt levels are hitting new highs. Total public debt in the US has climbed from below $400 billion back in 1970 to about $27 trillion today. That's an increase of 6,650%. And to compare over that same time frame, inflation is up less than 600%. Most numbers standalone really don't tell us much. That's why it's important to compare them and look at really the bigger picture. So to get an even better understanding, let's compare total US debt to GDP. This chart I created in Python. That's a recent passion of mine, learning how to program and analyze data in new ways, although this is just a simple chart. Since the 1970s, it's climbed from just above 30% to 136% mid-2020. That's a wild jump, and it looks unprecedented. Although, unlike most sources on the topic, I've dived a little deeper. I've pulled data going back close to 100 years. This will give us an even better understanding due to longer credit cycles and other big world events. Total US debt to GDP came in close to 120% in the 1940s. And can you guess why? Well, World War II was expensive and it messed with the country's productivity. I'm not going to compare one of the world's deadliest wars, roughly 75 million deaths, to the recent pandemic, about 2.3 million deaths worldwide so far. But nonetheless, you can see the US has surpassed record high debt levels, even on this relative basis. And this trend will likely continue. Janet Yellen, the previous Fed chair and now Secretary of the Treasury, has said, while the pandemic is still seriously affecting the economy, we need to continue extraordinary fiscal support. We need support for the economy from both monetary and fiscal policy. There's no doubt more stimulus will help, although at what cost? Will the short-term benefits outweigh the long-term downsides? When it comes to individual borrowing, they're borrowing, well, if I was to borrow money, I'm borrowing from my future self at a higher cost. Of course, on occasion that can make sense, like buying a house, but more often than not, borrowing money leads to a worse long-term outcome for the borrower. MMT is the world's biggest economic experiment, and we don't know how it's going to unfold. The secondary impacts are really mind-boggling. For example, many people that oppose MMT fail to factor in currency competition and global trade. As I mentioned before, countries have to leverage up together to stay competitive. It's a dangerous game, and they're really kicking the can down the road. To make the situation a little riskier, the US and other countries own some of each other's debt. As a result, if one country defaults, that could easily send a shockwave throughout the rest of the world, and it could lead to big credit contractions. To put this in perspective, I'm going to leave you with an old adage. If you borrow $1,000 from the bank and can't pay it back, you have a problem. But if you borrow $1 billion from the bank and can't pay it back, well, then the bank has the problem. Thanks for checking out my video, and once again, I'd really appreciate it if you just tap that like button as well as subscribe. Also, did you know that there are 2 companies with higher credit ratings than the US government? You can check out my recent video on that to find out what those companies are. And a little more insight on that end. Also, I've really appreciated all the comments I've gotten so far. That support really helps motivate me to share even more research. Thank you.